the immortals.
And the formula is very simple actually. It's just levels of support and resistance, long-term levels of support and resistance, and then price action around those levels of support and resistance. Okay, basically what we are going to be doing here is to wait for price to reach a key decision taking level in your chart, okay? A key decision taking junction or crossroad in your charts, and then we are going to be reading rather closely price action around that level. Depending on how price reacts of that particular level, well, we are going to be trading always in the direction of the reaction, okay, of the market reaction, either to the upside or to the downside. Let me try to explain what I mean. Let's imagine price had been, I don't know, uptrending, okay, on the daily, weekly time frame, on any long-term chart, all right, and eventually it pulls a final swing high of that level. Let me actually clean that up. Okay, price has been uptrending there, topping out at that level, and from there the trend collapses and it comes back down. Okay, that's a major swing point on this chart, the point at where price failed to keep on pushing through. All right, the price at where the bulls failed to sustain the control on this market, and they gave way to the bears, right? So we would mark that level as a key support and resistance level, right? And then let's assume price comes back, I don't know, 5, 6, whatever, however many weeks later, comes to retest that level once again. Now the question is, the question the market as a whole, the market analysts, big traders for working for investment funds, for central banks, the question they are asking themselves here is, will price respect that level of resistance once again, or will price fail to break above once again, and as a consequence we are going to see another retracement back down? Basically what we want to gather here, what those big traders, what they want to gather here is whether price will be able to give us a breakout, or instead it will give us a price reversal. Our job as long-term traders here is to read very closely price action around that level, all right, price action around that level, and then simply trade in the direction of the market reaction as per some specific parameters that we are going to be seeing very soon on a following video, right? I don't want to get into the actual trigger signals, the actual price patterns we are going to be triggering our trades on. On this particular video, I just want to show you guys the concept, okay, what we are going to be basing our work on. So once we've been able to define a key level of support and resistance, as soon as price comes to retest that level once again, the question remains, are we going to get a breakout or are we going to see a bounce? Those are the only two possible scenarios here, alright? Price cannot stay there forever, right? It just cannot. Eventually it will either move up or move down, and we are going to have to be ready in order to trade in that direction, in that particular direction. If we get a breakout, we are going to be searching for particular price formations in order to signal our long entry. If we get a bounce, alright, if price respects that level of resistance once again, if it fails to break above, alright, and instead we get a bounce, well, we are going to be searching for some specific price formations in order to ride another move down, just as we saw the first time around, alright? That's basically the idea here. So, to wrap it up real quickly, we are going to map our daily, our weekly, our monthly charts with those key levels of support and resistance. Then we are going to wait for price to retest those levels, and then we are simply going to follow price action very closely for the upcoming days, see whether price gives us, again, either a breakout or a bounce, and then we trade accordingly as per few specific price patterns that we are going to be seeing over the following videos, okay? That's all there is here, alright? That's all there is here. I know it sounds simple, I know it sounds, rather straightforward, but trust me guys, simple works. We don't need to overcomplicate things here, alright? We don't need to search for, complex combination of indicators. None of that. We're just gonna be basing our decisions straight from price action around key decision taking levels. And then we're gonna take our trade and we're gonna monitor that trade over the following days. And again, don't you worry, it's not going to take more than 20 minutes a day. Just a quick look into your charts to decide whether you want to let the trade run or, to exit the trade altogether, etc., etc. But at any rate, the formula we are going to be following, all those different strategies I'm going to show you very shortly are based on this principle. key levels of support and resistance, price reaction of those levels, trade accordingly. As simple as that. Okay, so we are going to mark both horizontal and diagonal levels of support and resistance. Some of you may know diagonal levels of support and resistance as trend lines, right? Obviously, in order to define a horizontal level of support and resistance, we only require one price point. Okay, if this is price, and let's assume it tops out at that level, and from there it retraces all the way down, well, that gives us a clear horizontal level of support and resistance. In the other hand, in order to mark a diagonal level of support and resistance, we need two swing points. So if price tops out there, then it goes all the way down, then it rallies all the way up, and from there it retraces back down once again. There we have it. There we have our two swing points that allow us to mark that trend line. So remember, let me clean up my screen. In order to define a horizontal level of support and resistance, we just need one significant price point, price swing point, and in order to mark a trend line, we actually need two, all right? Either, regardless of whether it's a downtrend or whether it's an uptrend. All right, guys? Anyway, you are surely familiar with all these concepts already, so I don't want to spend any more time with that. Let's move on. You are to mark only the most obvious price swing points in your chart, and this is very important. Many traders make the mistake of micro analyzing their charts, and therefore they draw horizontal levels, a number of different horizontal levels at every individual price swing in the chart. That's not the way it's supposed to be. You usually don't want to mark more than 2 or 3 levels of support and resistance in your chart. Regardless of whether it's a horizontal or a diagonal level of support and resistance, it's very important that you keep your charts clean, and therefore that you only mark the most obvious price swing points and obviously the most obvious levels of support and resistance in your chart. I paused the video just for a second because I wanted to write a new line of text in this slide presentation. This one in particular, all right? Newer levels of support and resistance are far more relevant than older ones. What does that mean? Well, I also talked about this in a previous video. The markets have a very short memory span. Very short memory span. That means that any level of support and resistance that's already been outfaced by the chart, obviously as the chart prints and new candles, the chart obviously moves forward, right, towards the right edge of your chart, and that means that any level of support and resistance that you may have marked previously on this left side of the chart will soon become outdated. Again, the markets have very short memory span, and therefore traders don't really look back too much in time. Any trend line that was taking place down there, any horizontal level of support and resistance will soon become outdated by the market action itself. Traders as a whole, the market as a whole, tends to focus their attention more on this side of the chart than on this side. So I repeat, try to clean out your levels, try to clean out your charts of old levels of support and resistance, and focus or keep on drawing new levels as the market itself begins to print new significant swing points. Okay? Now, let's talk about a concept that I'm sure you are familiar with already because I've mentioned it a number of times through my videos and through previous modules, okay? That's the concept of former support once broken becomes resistance, and the opposite holds true as well. Former resistance once broken becomes support. Basically, that means that if you have a swing point, a significant swing point, for example, to the upside, obviously that gives you the opportunity to mark a horizontal level of resistance. Well, once price breaches through that level, you are not to delete that specific horizontal line, you are to keep it in your charts, because as price may come down and retest in the future that level once again, guess what? This former level of support may now work as resistance, and therefore from there price may bounce up again. This works both to the upside or to the downside, and it works both on horizontal levels and diagonal levels as well. Let me just if we were talking about trend lines, it would more or less work like this. If you had a swing point to the downside and then another higher swing point to the downside, that obviously gives us two leaning swing points, and as a result I can draw my typical trend line, right? Well, once price eventually breaches through that trend line, and eventually price always breach through any trend line whatsoever, there is no trend line strong enough to hold price forever, right? Anyway, once price does break through that trend line, as it retraces back up, it may come to retest that specific trend line from below, and from there this former support diagonal level may now work as resistance, and from there, like I say, price may bounce back down once again. Alright, so as a general rule of the thumb, no level of support and resistance is to be deleted from your chart, even if it's broken once. Now, let me go on. If any specific level of support and resistance gets breached twice, there is where you are to remove that level, okay? Because the market has proven to, well, disregard that level of support and resistance. For example, again, let's imagine you have a significant swing point to the upside, you mark your horizontal level of support and resistance, and then price breaks through that level just as before, and then it comes back down to retest it. But hey, let's say that instead of bouncing up from that level, and therefore proving this level to be still valid, let's say it continues to, it breaches that level once again, this time to the downside, and falls back down below that that level of horizontal support, resistance in this case. Well, guess what? The market has proven that this level is not valid anymore. Not only once, but now twice. So what are we to do? Well, we are to listen to the market. That's why this is price action reading. Okay, we are to read price behavior in our charts. The market is telling us that this level is not respected any longer. Again, not only once, but twice. Therefore, the breakout is confirmed. We are to delete this specific line, and we are to mark the new resistance structural point, which is up there. So we would be marking that level as our new reference point for resistance in this chart. Okay, that's how you delete all levels of support and resistance once they get broken twice. Now, there is another reason as of why you may want to delete a level of support and resistance, even if they have not been broken twice, or even if they haven't been broken at all. And that's if they become outdated. Okay, you are to remove levels that become outdated. Now, when does a specific level of support and resistance become outdated? Well, obviously, if this is your chart, right? Let's say this is your chart window of any specific currency pair, any specific time frame, it doesn't matter. Well, obviously, as time evolves, price continues to print new price points in your chart, right? Well, let's imagine that you had previously, actually, let me redraw that once again, just sorry about that. This is our chart window, and let's imagine that price gave us a significant level of resistance in there, all right? A significant peak to the upside, we mark that level, but price continues its merry way, printing new price levels and so on and so forth, and obviously price the chart begins to scroll forward, and therefore this price action becomes outdated. I already talked about this on a previous video. The markets have a very short memory span. All right, so as price begins to scroll forward, anything that was happening before, anything that falls behind our chart window begins to be regarded by the market as less and less and less significant, just because it's old news, all right, it's old price action, and therefore any level of support and resistance generated by that old price action will be itself also regarded as old news and therefore as outdated. Okay, so to cut it short, guys, as price begins to move forward towards the right edge of your chart, any level of support and resistance that was generated on the left edge of your chart becomes less and less and less significant, and therefore eventually you simply delete it, even if it wasn't breached at all. All right. There is only one exception as of why you may want to keep an old level of support and resistance, and that's if you zoom out into the longer time frames, remember what I said in a previous video, you are very rarely to scroll back in your charts. If you want to review past price action, you are to zoom out into the longer time frames. Okay, so as you zoom out into the longer time frames, if that level still becomes significant in the longer time frames, then you are to keep it. Okay, then you are to keep it. Only if that old level of resistance, if you zoom out into the longer time frames, this peak up there, that swing high, is also visible, is also I would say obvious or remarkable in the long-term charts. If not, okay, if you zoom out into the longer time frames and that specific level is not significant anymore, go ahead and delete it, even if it hasn't been breached yet. All right. Anyway, I know that's a whole lot of mambo jumbo. I am probably getting all of you confused, so I reckon it's best if I try to apply all those theoretical concepts into an actual chart. What I'm going to do, I've just simply picked a random chart. This time around is the euro against the American dollar in the 4 hours time frame, but again, this could easily work no matter the time frame, no matter the currency pair. Alright, so what I'm going to do is to draw some levels of support and resistance, just so you guys see how I go about drawing them myself on my own charts. Alright, so whoops, sorry about that. Let me scroll forward and let me compress my chart a little bit, just because I like to compress the vertical axis a little bit for a clearer picture. Anyway, here we are. Excuse me. Let's begin drawing our levels of support and resistance. So what do I see in this chart? Well, first of all, I obviously see this significant level of support. Resistance, okay? Price has been topping out at that level, in fact, 3 times, and therefore we have what in the trading lingo is called as a triple top. Alright, that's a triple top. Let me actually push that up a little bit. There we are. Again, 3 swing points, okay? Getting the candle's tip, right there, and I can align them in a horizontal line, and pretty much the same thing goes for these these swing lows, which I can certainly align them in what's an upward trend line, right? So I am going to mark that also with a trend line there, right? So at this junction of the chart, what I have is this resistance level and this support level. Now, this support level has been broken once, okay? But as I said before, if any level of support and resistance is broken once, I am still to keep it, because as price, or perhaps because price may retest it, and from there it may find resistance. Again, former level, the concept of former level of support, once broken, if retested from the other side, it may work as resistance, and as a result, price may turn down from there. That didn't happen, okay? Price never came to retest that specific level. In fact, price simply shot all the way down. And if now price was to come all the way up there, I would have to simply extend this trend line into the future. By the time price was to retest that specific level, guess what? These levels of support here, and therefore the resulting trend line, would probably be outdated, okay? And therefore, well, I am certainly more comfortable simply deleting this trend line, because it's just not significant anymore. This uptrend is just not significant anymore as to what's happening right now in the market. If, like I said before, price was to ever retest that trend line, a long time would have passed, and that trend line would be long forgotten by the market, okay? Now, am I to keep this specific level there? Let's say may price come all the way up there to retest that level? Yeah, sure, price may retest that level, and since it's not been broken yet, I'm gonna keep it in there, or at least what I'm gonna do is I'm going to check the longer time frames just to confirm whether this level is still, let's say, viewable or remarkable in the longer time frames. Since this is the 4 hours time frame, I am going to zoom out into the daily time frame. Okay, so this is the daily time frame. Is this level remarkable in the daily time frame? Yeah, absolutely it is. I would say that in the daily time frame, I have this level as a remarkable one, this other level as a remarkable one, and these 3 ones here, which, in case you haven't noticed, we have an upward trend line there. Alright, so as far as the daily time frame, these are the 3 levels that I would mark. Okay, Those are the three significant levels of support and resistance that I would mark. So since this is still a remarkable level in the daily time frame, I will just go ahead and keep it also on the 4 hours time frame. Okay? Now, let me go back into the daily time frame just not to get you guys confused. I'm going to delete all these levels and I'm simply going to focus on the one that I've just been talking about. Okay, so as I was mentioning before, even though this one is rather old, since it's still significant in the longer time frames, I am to keep it. In the other hand, I am not to keep this trend line here. Okay, actually, hey, why not? Let's conduct the same exercise with this trend line. If I go into the daily time frame, is this trend line really significant here? In the daily time frame? Not really. At any rate, maybe this trend line would be significant. But guess what? Again, by the time price goes all the way up there, all right, well, this trend line is applicable no longer because a trend line is only valid as long as the trend remains in place. Okay, let me zoom in a little bit so you guys see that trend in detail. In fact, it's some sort of a channel, all right? I'm sure you guys can see this upward channel there, all right? You see this channel there? But guess what? That channel is long gone, price is uptrending no more, price broke down, and therefore this market occurrence, all right, has been long forgotten by the market, okay? So I am simply going to delete it and simply keep the horizontal level of support and resistance. Anyway, let's go back into the 4 hours time frame chart. We have one level of resistance in there. What about support? Well, I have this clear level of support. Do you see this swing point there? Is the the absolute bottom of this entire move down. Okay, and therefore I am to mark it as for the time being, a level of reference as far as support goes. In fact, it's a double bottom. It got retested immediately after, and it got market respected that former level of support, and well, therefore that level is still in place. Okay, so as far as I am concerned, we have this level of resistance and this level of support. We have a minor level of resistance in there, but guess what? It got broken there, and then it got broken on the way down. Okay, you see how that level has been broken twice already. Okay, firstly there and then there. So as per the indications before, any level that gets broken twice, guess what, guys? It is to be deleted. All right. Any short-term level of resistance? Well, we still have this one in place right there, which is in fact being retested as I record this video. Okay. The market is right now retesting that level. We still don't know whether it's going to pull through or whether it's going to come back down. Still don't know. That candle is still open. This is current market ticking price, and therefore I still cannot determine whether this level is still valid or not. For the time being, it is still valid, okay? Because price has not really breached through. All it's doing is, so far, it's kind of teasing, kind of testing that level. For the time being, I cannot determine whether that level is to be removed or not. So I'm just going to leave it for the time being. Alright, so now that I've conducted this exercise, let's come to a conclusion. Significant levels of support and resistance, or let's say major level of support and resistance in this chart. Euro, American dollar, 4 hours time frame. We have one major level of resistance and one major level of support. And we also have a minor level of resistance right there. All right, that's all there is in this chart as far as support and resistance. I could also draw a a short-term, let's say another not really significant level of diagonal support in here by linking these two swing points. Okay, again, it's a minor level of support in there because these two swing points, especially this one, is not really that obvious. It's not a major price turning point in the market, such as this one. Okay, those are two major big capital letters resistance levels, but this swing point is not really that important. So if I was to mark it, I would keep a mental note, and knowing that this is not really that strong, just as this one. All right, the two main ones, this one as support and this one as resistance. Anyway, before I go about showing you more charts and, throwing down your throat more levels of support and resistance, I'd like to cover, if I may, another theoretical point. And please, guys, pay attention here, because this is probably one of the most important pieces of information you can extract from this video. The more times a specific level is tested and respected, okay, both tested and respected, meaning that it's not breached, all right, the more obvious that level becomes to the market. And I stress to the market because this is why this piece of information is so important. Pay attention here, guys. The markets are not a an ethereal being, an ethereal entity with its own personality, all right, in itself. It's not really. The market is simply a place where individual human traders, just like you and me, come together to trade, to exchange positions. That's why it's called an exchange stock market or exchange currency market, because it's a place where individual traders come to exchange positions. Why do I stress the fact that these are individual human traders? Well, because the market as a whole is bound to react according to human psychology, because the guys moving the market are individual human traders themselves. All right. So human psychology dictates that the more times one specific level has been retested, all right, the more times one specific level comes in play in the market, the more obvious that level will become. The more and more individual human traders, the more attention those individual human traders will be paying to this specific level. So next time price comes to retest this level, we can expect a far greater and greater market reaction from that level, because again, more eyeballs will be laid onto that specific level, more trading volume, more trading orders will be waiting to be triggered at that specific level, and therefore, whether we get a bounce or a breakout, at any rate, that market reaction is meant to be more violent, okay, more reactive, so to speak. I mean, if we only have a one swing or a single swing level of support and resistance, we are only going to have an X amount of eyeballs following that level, just because that level has not really become that clearly obvious to the market. Now, the next time that level is tested and retested and respected, more eyeballs, more traders will be looking into their respective charts and will be thinking, this level is already holding twice. Now, let's assume price retests and holds that level 3 times. Well, the entire market, thousands upon thousands of traders around the world will have marked that specific level in their respective charts, and they will be treating that level as significant. Therefore, like I said before, next time price comes there, or maybe even if it breaks and comes down to retest that level from below, at any rate, more traders will have their trading orders waiting at that specific level. Either entry levels, or perhaps stop loss levels, or perhaps profit-taking orders, but at any rate, a greater trading volume will be waiting to be triggered around that specific level, and therefore, again, either a bounce or a breakout we may get from that major level of support and resistance will be very violent, very rapid, and will be carrying a higher trading volume. All right, so why am I telling you all this market psychology mambo jumbo that no one is interested in? Well, because you certainly want to mark levels that have been tested twice or more. All right, those are the levels that you certainly want to keep in your charts, because again, more and more traders will be themselves charting those lines in their respective chart platforms. All right. Alright, let me show you another chart. This time around it's the sterling pound against the American dollar 4 hours time frame. Let's conduct the same exercise. Let's draw some levels of support and resistance. And firstly, as usual, I like to squeeze in a little bit my vertical axis there. So, what levels of support and resistance do we have here? I'm gonna draw them from left to right. Okay, so first one, we have this swing point, rather clear, rather obvious. I would certainly mark that level there, but it got broken once and then it got broken twice. Therefore, any level I may have previously marked right off that specific swing point, I was to delete it, okay, altogether. Moreover, we have this trend line there, all right? Because we have this swing point and that swing point, and then it got retested once again from there. So I certainly can align a trend line from there. All right, but as I mentioned previously on this video, if I am to extend this trend line, by the time price comes to retest that level, this trend line will be long forgotten, and therefore well, it would be valid no more. All right, it will hold significance in the market or for the market no longer. Usually, as a general rule of the thumb, trend lines or channel boundaries, if you notice, this is in fact a channel. All right, a two swing or a double swing channel. The channel boundaries, like I say, are relevant as long as the channel is not broken, or once the channel is broken, very shortly afterwards. Okay, so if price doesn't come to retest this trend line right away within the first swing pullback, all right, then we can simply go ahead and delete it. Okay, if price continues on its merry way without retesting this trend line right after that first initial breakout, then my experience dictates that usually we can safely go about deleting the trend line and focus on more current market events. Anyway, so we have also a swing point there, which is in fact the absolute high for this chart. Okay, and therefore obviously we are to mark it, okay, as our main reference point for resistance, at least on this specific time frame. Again, day 4 hours time frame. Moreover, as we scroll down, we have here another minor swing point in there and there, but I wouldn't really mark either of the two. Do you guys see how they are not really that, they don't stand out? You want your resistance and support levels to stand out right away. Okay, this one stands out right away, right? Doesn't it? As you land into this chart, you can easily visualize this level within a second or two. Not quite this one, alright, and not quite this one. And anyway, they got broken once to the downside and once again to the upside. This one is to be deleted. This one pretty much the same thing, got broken once there, another once again as price dived back down, okay, retraced back down. Therefore both this one and this one would be deleted in my chart. But then we come down to this point, which is again the absolute downswing for this chart. And moreover, it was an old point of support, which, well, it was an old one, but at any rate, the market confirmed it there and there again, and once again it got confirmed later on. So as a result, I can certainly define a very visually clear, alright, a very easily identifiable support there with that triple bottom there. Every time a line, a specific level gets respected by the market, more and more traders will be drawing this line in their respective charting platforms, and therefore we can expect more and more, or a greater reaction next time price comes back down. What does it mean? Well, it means that if we get a bounce off this level, it's going to be a sound one, right? A rather solid bounce. And on the other hand, if we get a breakout, it will also be a rather violent and a rather momentum-filled breakout. Because like I said before, we will have more, oops, sorry about that, guys. We will have more and more trading orders waiting to be filled, waiting to be triggered at this specific level, and therefore whatever consequent reaction we get will be again, momentum filled. Okay, it will certainly be a solid move to either direction. Okay, and finally, I would mark this one as my immediate short-term level of support and resistance, which is also being retested right now by the market. It's so far holding. Okay, please notice, in fact, let me draw a trend line at that level. Please notice how price has come back up to retest that level, and from there we are finding indeed resistance. So not only this level is valid, but if eventually it does hold and price comes back down, we can certainly mark this level as valid and as strong, and therefore, well, price will be contained between two strong levels, a strong level of resistance and an even stronger level of support. Therefore, as soon as price, we will see that in future lessons, but as soon as price breaks free from this range in either direction, again, either to the upside or to the downside, we will clearly see a valid, solid move in either direction, and therefore, again, as you will see in future tutorial videos, we will get valid trading opportunities both at this junction of the chart or at this junction of the chart down there. All right. That's why it's important to not only mark levels of support and resistance, but also identify which ones are the strong ones and which ones are the milder ones. Because we want to trade, as a general rule of the thumb, market reactions of stronger levels of support and resistance. Those are the ones that usually give way to not only the more solid profits, but also to the faster profits. All right? Anyway, let's move on, shall we? Levels of support and resistance count downwards, but not upwards. Okay, and I'm talking about time frame here, guys. What does this mean? Well, it means that you should label, or at least take a mental note for every specific level of support and resistance as per which time frame you've spotted that level of support and resistance. Okay, for example, let's imagine you are reading the daily time frame. Okay, and well, you spot the typical swing high, and from there you determine the horizontal level of support and resistance, right? Well, like I said before, you should either make a small note in your chart, or perhaps simply take a mental note that is a daily time frame level of support and resistance. Okay. Now, depending on how far you zoom in or out in your charts, chances are that you could spot the same level on multiple time frames. All right, so chances are that depending on how far you zoom in or out your chart, you could find the same level on perhaps on the daily. All right, but perhaps also on the weekly. Now, I've already established on a previous video my recommendations as far as zooming in and out and scrolling back and forth in your charts. Alright, so as per those instructions, you should be able to determine which is the sweet spot, which is the most obvious time frame to draw every specific level of support and resistance. So, why do you want to take that mental note? Okay, why would you like to label every level of support and resistance as daily, or as 4 hours, or as 1 hour, etc., etc.? Well, because trading decisions, levels of support and resistance should count on your trading decisions downwards, but not upwards. Again, let me explain myself. Let's imagine that your trading system is based around the 1 hour time frame. That means that you're trading a trading system where they set up chart, okay, the main time frame of reference is a 1 hour time frame. So, you should only search, or actually you should only draw levels of support and resistance in the 1 hour time frame and upwards, okay? 4 hours time frame, daily, weekly, etc. There is no need whatsoever to bother, all right, to spend any time whatsoever drawing levels of support and resistance in the 30 minutes time frame, or in the 15 minutes time frame, or even in the 5 minutes time frame, because like I said before, these levels of support and resistance coming from these time frames are not significant enough to make any trading impact whatsoever on your 1 hour time frame trading system. All right, like I said before, they only count downwards, not upwards. All right, so like I said before, you have to label every single level of support and resistance to know which one is significant and which one is not, as per your trading system, depending on what time frame those levels of support and resistance come from. Okay, and in case you are getting, this is important, guys, in case you are getting two contradictory signals from two different levels of support and resistance, let's imagine this is price, for example, and you have a level of, I don't know, let's say resistance up there, and perhaps a support in the shape of a trend line. All right, so basically price is entrapped within two levels of support and resistance. Usually the longer time frame prevails. So if this trend line comes from the weekly time frame and this level of support and resistance comes from the 4 hours time frame, chances are that this trend line will indeed prevail, and therefore price, more often than not, I would say about 70% of the time, should break to the upside, just because the weekly support, okay, the trend line, is stronger than the 4 hours resistance, meaning that level right there. All right, and therefore price is more keen to break through the weaker level than through the stronger. All right, so like I said before, it's important to keep in mind always what time frame, what chart the level of support and resistance comes from. I have showed you guys this chart before. It's the euro against the American dollar, 4 hours time frame, and I have also, we've also talked before about this junction of the chart where price kind of tops out in fact multiple times around that specific level, and therefore we can clearly draw a horizontal line in there. Alright, let me actually be accurate with my lines. I like to always confirm that my lines are pinpointing the tip of the candles. Okay, anyway, so this is clearly a market top. Okay, now I am looking into this chart into in the 4 hours time frame. All right, however, as I was mentioning before, again previously on this video, this area of the chart is kind of falling back behind just because price continues to print new price bars, and therefore this scroll is taking me forward, right? So I have two options: either to remove this level of support and resistance, or to take a look into the daily time frame. And if I look into the daily time frame, this price swing point becomes even more obvious, right? Since the price turn, okay, is in fact sharper on the daily time frame than it was in the 4 hours time frame. Let me in fact go back into the 4 hours time frame and scroll all the way forward. Do you see how this is kind of like a plateau, right? Rather than a sharp or that a clearly visually identifiable turning point, price swing point in your chart. That means that at this point, at least, this level of support and resistance belongs better to the daily time frame than to the 4 hours time frame. Pretty much the same thing here. Do you see how there are multiple bars topping out at that level in the daily time frame? Well, and therefore this clear swing point, just as this one really, and this one as well, etc., etc., they are so much more clear, sharper in the daily time frame than in the 4 hours time frame. So we would take a mental note that these two resistance points and these support levels, or in fact this trend line in there, linking, just 1 second guys, let me actually draw a trend line. There we are, that trend line there, alright, and those two levels of resistance. So all those levels of resistance come or are better visualized on the daily than on the 4 hours time frame. So my job as a trader is to define, to make a mental note that all these levels belong to the daily. All right. Now, if I go into the weekly time frame, all right, a longer time frame, well, I can see that these levels are not really that significant anymore because I've moved out in time, right, and therefore they are bigger fishes in this pond, so to speak. All right, there are far greater levels of support and resistance, which I should also analyze and take notes in my chart. Okay, for example, this one down here as the absolute minimum, all right, and this one up here as the absolute top, at least for the time being in this chart. Okay, and obviously I would conduct that exercise in all time frames just to make sure that I've mapped out, okay, that I've taken notes of all the significant levels of support and resistance in all the different charts. Okay, sorry, in all the different time frames. This one I will not take into consideration since it's broken a few times. This one could also work as a level of resistance, but not really. I'm not particularly, I don't think that one is a major level of resistance. Perhaps I could draw a trend line in there. All right, I would do so as well. In fact, it's a channel. I'm sure you guys can see this channel here. So I would certainly mark the channel boundaries. However, my point here is to let you know of a trick, of a recommendation that I use myself in order to remember which specific time frame every single trend line belongs to. So what I do is to use a color code. I draw my trend lines or my levels of support and resistance on the weekly time frame in a different color. So if this is the weekly, I would simply go to trendline properties and mark them as, I don't know, let's say red. All right, every single trend line or level of support and resistance that belongs to the weekly time frame, I will mark it in red. Okay, now those ones I will leave in blue since they belong to the daily. All right, now if I zoom out into the monthly time frame, all right, well, into the monthly time frame, I can see this one here. This one here, not really, since it's been broken twice already. Maybe this one, all right? In fact, it's more or less the same level, more or less the same. It's more or less like a, let's say, an area of support and resistance, and this one as well. Now, do you see how this swing top is very clearly defined on the monthly time frame as well, without me having to zoom in or to zoom out or anything, just keeping my standard zooming level, right? That means that this level that I had marked as a weekly time frame level of support and resistance is in fact a monthly time frame. All right, I like how clearly I can visualize these price swings on the monthly time frame, and therefore I will mark this level as a monthly time frame. This one though, I will leave it as a weekly. So what I'm going to do this one is to mark it in a different color. Let's say, for example, green. All right, so I know that every green line in my chart belongs to the monthly, every red line belongs to the weekly, every blue line belongs to the daily, and so on and so forth. And moreover, I will also remember that any green line that I may have put in my charts is usually stronger, let's say 70% of the times, they are usually stronger than any red line in my chart. And at the same time, any red line will be also stronger than any blue line. Okay? Now, let me go back into the daily time frame. Okay? And I need to scroll all the way forward. Just 1 second, guys. There we are. So, let's assume that my trading system is indeed based on the daily time frame. Okay, that would be the setup chart, the main time frame of reference for whatever trading system I may be trading today. Okay, so if that's the if my main time frame of choice of reference is the daily time frame, that means that I should spend no time and no effort whatsoever zooming into the 4 hours time frame. Okay, and let me scroll forward once again and start drawing levels of support and resistance such as this one, because as I said before, levels of support and resistance don't count upwards, only downwards. So no point in drawing any level here, because any level here will not count to my main time frame of reference, which, like I said before, is the daily in this hypothetical case example. Alright, so I would only draw levels of support and resistance from my main level, my main time frame of reference upwards, not downwards. Okay, guys? Anyway, this video is already running too long, so it's time to wrap it up. Drawing your levels of support and resistance is absolutely crucial in order to read price action and therefore, to be a successful trader, no matter what trading system you follow. Okay, you must always draw your levels of support and resistance accurately, and by following these tips, all right, that I've disclosed through this video, that should give you a hand. Okay, that should always help you to pinpoint, to determine those levels of support and resistance accurately. All right, remember, guys, mark both horizontal and diagonal levels. Mark only the 2 or 3 most obvious levels per chart and per time frame, no more than 2 or 3. The newer levels of support and resistance are always more relevant than the old ones. The old ones become outdated rather quickly. Remember, short memory span by the markets. Moreover, the concept of former support once broken becomes a resistance. Very important. Therefore, even if price breaks once a price level, you should not delete that line. You should remove that line only after the level has been breached twice, or after the level has become outdated. And if it has indeed become outdated, then check the longer time frames to confirm whether that level is still significant in the longer time frames. If it is, change the color. If it's not, delete it altogether. Also, very important, the more times a price level tests one specific level of support and resistance, the more obvious it becomes to the market as a whole, and therefore the more important, the more relevant, and therefore the greater the trading impact that level will have once price touches that level the next time. Okay, and finally, remember, label your levels of support and resistance as per their respective time frames, and make sure to only mark those belonging to your time frame of choice and upwards, not downwards. Okay, that's basically it, guys. I hope you found this video helpful as far as drawing your trend lines, your horizontal levels of support and resistance. You may want to actually write down these different points, okay, these different lines in a post-it sticker and stick it next to your monitor, next to your computer. So every time you start drawing, you start conducting this exercise of marking levels of support and resistance in your chart, you always keep them in mind. You know, you run through, at least from a mental point of view, you run through this quick list just to confirm that you tick all the boxes again as you mark your levels of support and resistance on your own charts. Okay, cheers, guys. Bye bye.